Welcome all to the node. I am Mike, aka Veteran Crypto, and joining me shortly will be David. But today we're going to be focusing the majority of our time on Canton. There's just way too much going on, so I kind of feel like we need to do a whole show on just Canton and things being built on Canton and news, that involves Canton. I really tried to stay away from focusing too much on any one project, just because I don't want to get hyper focused, um, and have a look and feel of being a maxi on anything. But it's so hard to not talk about Canton Network. Out of all the projects that are out there right now, it's really the one that's getting the most adoption. We showed yesterday how it's generating more fees than like the next nine, as far as like the top 10 generating fees and revenue than the rest, the top nine combined, and it's only gotten started. I mean, that's really from Broadridge. That's from basically one customer. So it's today we're going to be doing deep dives into two Canton projects. It's going to be Cancore and Helios Finance. So two DeFi projects. One of them I know David's going to love. They are hyper focused on bridging over from Bitcoin mainnet. And we know that we are going to be having that we had Zenith on. And Zenith is also working on going live and bringing over Ethereum dApps, Ethereum native dApps over to Canton Network. So there is just a lot going on with Canton, and it ticks all the boxes for us. And I actually saved. I'm going to share this real quick. I saved this, and I was really. It never ceases to amaze me that people. So this person, Alex, I kind of go back and forth with him on X, but he posts great content. But tokenomics versus hype, the 100 token audit, not price, not hype. So they went through and they graded these based off protocol function, if there's a token required, if it's mandatory or optional. So, basically, is there utility for the token? Revenue touch, value capture, mandatory demand, value accrual. Does the value flow to holders? That's the value accrual. Mint burn, is the supply shrinking, and distribution sustainability. What's that? Substitution, whatever. Can a cheaper swap replace it? So they went through and they graded them, and Hyperliquid came out on top. Not a surprise. Bitcoin Zcash, find that interesting. A lot of these I don't agree with, but it's interesting to see. You have Canton here at 64, and so I'm kind of wondering, how it is that they're grading these, and what it is that they're actually looking at. So anyway, I wanted to share that.
So here, let's pause here at those criteria for a second, because we know a lot about all these protocols, these coins. So protocol function. So does it break without the token? Okay. Token required. Is it mandatory or optional? Got it. Revenue touch. Does the token touch revenue? Does BTC touch revenue?
No.
Okay, so what else was in the top one? The top tier?
What I mean, though, is using their criteria.
Injective? Really? Injective?
Yeah.
Litecoin? Zcash?
Yeah. I'm not seeing how they graded these.
Value accrual? Litecoin has no value accrual. Neither does Zcash. Neither does Bitcoin. Injective's value accrual is super weak.
Yeah.
No. Does this guy have a big following, this account?
Let's see. No, but I don't think he built this though.
Huh.
I think he got
Alex. Okay.
yeah, free access, no paywall. Monkeynomics.xyz.
Yeah, this is a bunch of bullshit.
If they created this, this is terrible.
No, this is nonsense.
Yeah.
So
To show you, you can't just take stuff like this at face value. We always talk about this, where you can't just treat an X post like gospel. Because if you looked at this, you'd be investing in Bitcoin would be fine, Hyperliquid you'd probably be fine, Venice maybe even, Injective I
nope.
wouldn't touch it. Litecoin wouldn't touch it. Zcash personally, to each their own. I wouldn't touch it. But yeah.
Yeah, so Jeff is saying that they must have used a random crypto generator to get those picks. Those picks are horrible, dude. Like, we've run through so much deep dive research. We know a lot about these coins, projects, protocols, tokens at this point. We know a lot about this stuff, and just running through that list, yeah, no, thank you. So look, keep it simple. You don't need a bazillion different criteria. You need 3. That's it. You need 3. You need to know, are there users? Do they drive revenues? And do those revenues accrue to the token? That's it. Simple. Very simple.
Yeah, and Wispy, great point. Aave, is that far down the line. Cardano scored that well. No.
I mean, yeah, no, maybe they're getting paid by Chucky,
I don't know.
Could rank his coin a little bit higher.
Yeah. Layer zero.
So Mike, layer zero is garbage. But speaking of ranking a coin a little bit higher, so brother, I've been going through learning about Uni and the fee switch, and I'm starting to become more positive on Arrow because of Uni's fee switch. Uni's fee switch is not good.
Expound on that.
Yeah, so basically what Uniswap did over the last couple of days with that fee switch is I think it's like 30%. I think it's like 30, like between 20 and 30%, like off the top of fees generated by LPs are now just going to Uniswap, the protocol.
Yeah.
So that's like
they did that very quietly too.
Dude, that's like most of your profitability right there. If you're an LP on Uniswap v4 on any chain other than Base, like it's basically impossible now to be a profitable LP on Uniswap v4 on any chain other than Base. And they didn't do it on Base because they need to compete with Aerodrome. So here's the thing. What I'm thinking about is the Arrow token. What we need to understand to figure out like the value accrual for the Arrow token, this is what we need to understand. Okay, so that mint burn, that's the one bit that I'm not really solid on yet, because if it turns out that, and I know that you and I have a difference of opinion of what the word revenue means. Let me define what I think revenue means for the Aerodrome protocol. I think that 100% of fees generated is not protocol revenue. I think that the protocol revenue is that 5% that they keep. So that's what I think. Okay, so let me continue though before you jump in. So I think that the 5% that Aerodrome, the protocol, keeps, I think that is their revenue. And so if that's their revenue, and then they're using that to swap into Arrow and lock it. So if they're taking that 5%, swapping it for Arrow and locking it, then all we've got to do to figure out like if Arrow is inflationary, deflationary, if there's a legit value accrual mechanism, all we've got to do is figure out how much is being minted and then figure out how much is being locked, that 5% of the swap fees that gets swapped for Arrow and locked. And then that you see my logic here? If we know how much is getting locked and how much is being minted,
it's more nuanced than that, because then you have to look at the new platform. You have to look at
but we don't know anything about it. That's the thing.
That's my major issue that I keep bringing up. Aerodrome, if you're listening, that
WTF, man,
about the new token. We don't know all the details about the new platform, because what David's saying is true. But I'll add that as far as the token being deflationary, is, how much of the remaining 95% that's going to the arrow staking, not locks. They're changing it to staking. Those 4-year staking locks.
I mean, is that's an assumption though, right? You're assuming
Well,
it's going to be 4 years.
no,
I don't know.
everything that I've read, that model is still going to be the same as you choose how long that you want to lock for. But how much of that remaining 95% ends up getting max locked? How much only gets locked for 3 years? How much only gets locked for a week? How much gets locked for a month? There's so many nuances to it that we need to know the details so that we can start reporting on this, and we can start digging into these nuances and report to everyone kind of our take on it. And again, we're not pretending like we know everything. We're just going to report. We're not going to guess. We're just going to report on facts, what's been released. And there's still a lot of big question marks about the new Arrow token and the new Arrow platform. I'll be real.
I could see it.
Look, Arrow is my largest holding. I am hugely bullish on it, but I am going to point out when I see things of concern, and I'm seeing things of concern because how hard is it?
They got to put the information out there, man. That's it. It's easy. They put the information out there, and then all of a sudden, we don't have to be guessing. But I could see it working really, really well, though. Like I could see it working extremely well.
I'm still very bullish, but it always concerned me because this is something I pointed out about Keto, is that they talk about
that thing. I think it's a scam, dude. I'm starting to think that it's some type of straight up scam.
There's just way too many maybes and ifs, and we're thinking about, and then even when they talked about adding the the fees, it's basis point fees on the anchors and things like that. It's still, there was no details released about it, and then they're launching it, and still no fine details about what is the small fee. And then it talks about that only a portion of the small fee is going to be burned. So what does that mean? I mean, if it's a basis point and then a small fee is like 0.00001%, that's going to do nothing for the token. That's not a burn. That's that's trying to create.
So Mike, who was posting about it in the feed last night? Was it Jeff? I think Jeff was posting about it in the feed.
I've been busy.
I'm looking. I'm looking at the post right now. So yeah, Jeff was posting it in the community feed at the node.pro. And yeah, and I commented on each of his posts in there.
Yeah.
And I mean, look, man, like what I see in these posts is a bunch of hypotheticals. Like I see the word if being used all over the place. Like if this, then that. And it's like, what?
Ifs and maybes make my dick itch. It's
gross, dude.
It's just sketchy. You know what I mean?
Yeah, it's nonsense, man. Like, and look, I put it out there in our community that I think Kita, it's starting to show a lot of hallmarks of a scam. You got crazy zealots in the community. They're bag holders, and so they become community members. Like in crypto, you do not want to end up becoming a community member. Okay, that's a piece of terminology that's used to refer to someone who's sitting on a 90% plus loss on a bag of some bullshit token.
And so the only thing they have left is hopium.
Right. And they become like, crazed. They become like really crazy.
That community is not the only one. I mean,
there's a lot of them.
No, because I usually go into the discords I used to go into discords of the projects when me and Jeff were doing DeFi crypto and airdrops, and I would try to find somebody that was part of the team, or somebody that was an authority, a voice of authority in the community that was deeply knowledgeable about it before we started doing the deep dives, to come on the show, and we would talk about the project and dissect it and talk about the tokenomics and things like that. And when I first went into the Kita one, it was weird. Like I went in there And I mean, this is before I did any research on it. This is before I bought the token. This is just when we first found it. And I went in there and simply asked. I was just like, "Hey, is there somebody in here that's knowledgeable about the project?" I had some questions about the project, and people like jumped on me. Well, you shouldn't have questions. It's pretty obvious.
You shouldn't have questions.
I'm like, what the hell? And then finally, I was like, "Hey, whoa, pump the brakes." I'm the host of DeFi Crypto and Airdrops. I'm trying to find somebody to talk about this. Anyway, yeah, that's a big red flag for me. And
yeah. Seriously, man.
Yeah, if you can't ask questions or make statements about a project or details about it, especially when you cite sources, big red flag. Big red flag.
Like, look, you should, if you're running a project, you should want people to ask questions, and then you should be super excited to be able to answer those questions.
Yeah.
Like, it shouldn't be like, no, we ask the questions. We will be asking the questions here. It's like, what are you talking about, man?
Well, let's steer back to Canton here, because there is actually things going on with Canton. So we got BitSafe launches decentralization manager for Canton Network, backed by a $1 million foundation grant. We got console ecosystem locks 50 million CC. So this is part of the tokenomics of Canton. If you want to launch a featured app, or you want to be a validator or super validator, you have to lock a substantial amount of CC tokens. State of Canton Network H1, we went through that with the Palladium Labs. Digital asset raises an additional 10 million from Sheenhan Financial Group and SC Ventures, bringing round to 365 million. NASDAQ pilots tokenized collateral on Canton Network as Q2 earnings hit record highs. Canton Strategic Holdings sells Gravitas to focus on Canton Network. So it's just, the hits keep coming with this. And I actually set up a Loop wallet this morning because I signed up to get early access to Helios. And this is very EtherFi. Helios, and we'll be doing the deep dive here, but they have this Helios. They're going to have this Helios card. So it's going to be, it's basically a neobank is what it's going to be for Canton Network. So I signed up to get early access to this. And then also we'll be doing Cancore, the liquidity operating system for tokenized finance. And a lot of big names on this. You got Circle, you got Loop. The big thing is the atomic settlement. So we don't. It mitigates the the counterparty risk and a lot of other things. But yeah, the more this evolves, I just can't help, and I want to start using that Loop wallet and get access to some of these early projects that haven't launched yet on Canton Network.
Yeah, so I actually bought a Cypher Rock X1 this morning so that I can self-custody some CC, because with CC down at, earlier today, I saw it down at like 11 cents. And I was thinking to myself, like, I really want to start building a bag of some CC. But it looks like it looks to me like treasuries like bonds have started dumping. And as bonds have dumped, interest rates have bonds have started to get bid, and interest rates have moved sharply lower.
You reminded me. Let's do some TA. But before we jump into that, I did hear back from Alpend. Was it Alpend?
Yeah, Alpend. Yeah. Okay. So that's I think, isn't that a money market? Is that a credit infrastructure or money market?
Well, let's go there and look directly at it. We talk about projects. So programmable credit infrastructure.
Here, Mike, can you share that screen? So I want to see the. I don't think I'm able to visit Alpend. There we go.
Lend, borrow, deploy assets on chain with privacy, precision, and settlement certainty. So the CEO is going to be coming on the show. We secured an interview with him, so waiting for details about his availability. But as soon as we know, we'll let you all know. But yeah, I
I
don't know. I
can't
just
wait. That's going to be awesome.
yeah.
That's
I'm
going to
pretty
be absolutely awesome.
all right. So if you want to share your screen, we'll pop it over to you and let you do some TA real quick.
Yeah, so just pouring some more Covfefe there. All righty, man. So let's take a look at markets. Now, the first thing that we got to take a look at is BTC. And we're just going to pop in here and take a look at Bitcoin real quick. So I know that in the community, Tig Old Biddies in the community, he was sharing some technical analysis that he had performed on Ethereum. And we're going to get to that in a second. But taking a look here at BTC, Bitcoin puts in the same type of patterns over and over and over again. And so, right now we've got this level of support that failed, and that level of support failed. But notice the 200 period moving average on the 4-hour held. So as that 200 period moving average on the 4-hour held, we're getting the bounce and we're getting a retest. So this, let me go ahead and grab that arrow tool so we can see this a little bit more clearly. So this breakdown, holding support at the 200 period moving average and retesting what is now resistance. So getting the retest of resistance. And look, my expectation here, you guys, is that we see Bitcoin fail and Bitcoin move sharply lower into August and September. So the end of the summer, start of the fall should be when Bitcoin puts in its bear market trough. So July tends to be a positive month for Bitcoin in the midterm year during a Bitcoin bear market year. That's just according to the Bitcoin prophecy. And I know that, that word prophecy, a lot of people might have a problem with that. It's the Bitcoin cycle, And so the guy who is the very best at reading that Bitcoin cycle is Benjamin Cowan. So if anyone wants to, consume some of his content on YouTube where he talks about the Bitcoin cycle, he's by far and away the best. So if we zoom out here on BTC though, this is my target for the end of this summer down here at 49K. Now here's something that I've been thinking a lot about, Mike, and everyone who's watching. I've been thinking a lot about, there's always some type of crisis, always. And there's some type of, flush at the end of the cycle. In last cycle, it was FTX collapsing. The cycle before that, it was something to do with interest rates or whatever.
This past year has been nothing but a crisis.
Yeah, but we haven't had like an actual flush out. If you take a look at,
I think everybody's flushed out personally.
Nah, man. What I'm thinking is like, a flush out where in a single session or two, you get like a minus 20% day for Bitcoin.
Yeah.
Something like that. I
just wonder if there's any retail left that's willing to freaking be flushed out. Looking at the amount of people engaged in, crypto Twitter and, looking at the volumes on a lot of platforms and the liquidity that's been, sucked out of DeFi. And really, it seems like the only people here are the diehards and institutions.
Well, that's definitely true. That point that you made about institutions, that's a valid point because there's a lot of supply that has been sucked up by those ETF products that is no longer like really in the float. So
I think that's the only reason that we're not down in that range that you're eyeballing for a Bitcoin bottom, to be honest, is the buying up, the buy pressure as retail, and kind of the weak hands, on the ETFs and stuff. As those people sell, I think the institutions are buying everything up. That's the only thing that's keeping the price, up at all.
I don't know. The ETF flows don't support that. That statement. The flows don't support it.
One of the examples.
But there is a lot of supply that's been soaked up by those ETFs.
That was my overall point.
Yeah, and so when it comes to like a flush out, okay, take a look at the Kospi. This is the South Korean index. And, down 10.84% on the session earlier, in the evening, Eastern Standard Time. So the Kospi is in South Korea. So this starts trading at 7 p.m. my time. So yeah, this thing down almost 11%. That's a crash, man. So this thing has definitely crashed. So my only point with that, to show the only reason why I wanted to show the Kospi is to say that I don't think we have seen a real flush out yet. This is, if the Bitcoin bottom is in, and all I've got drawn in here is the August 2024 low, which I think will act as some type of important support. I've got my buy zone for Bitcoin drawn in here between 47K and 52K. This is my buy zone. And I want to start buying by the first week of October. That's when I start buying BTC. But right now I'm short, you guys. I'm short. I'm short. So, my first short entry was yesterday. I got short 15K. I added another 15K today. I'm going to add another 15K tomorrow, and a fourth tranche of 15K on the last day of this month. So I'm going to get that position size up to where I want it. And I think that I'm just going to probably end up holding that short down for the next, 8 weeks or so. I'm thinking that for the next 8 weeks, we probably just make a move down towards, the high 40s. That's what I'm thinking.
Where's
for
your
Bitcoin.
stop at? Are you setting the stop?
Yeah, of course, you have to. My stop is up above the 200-day moving average. So I will know that I am wrong if Bitcoin rallies up to 73K. So that's where I will be invalidated in my thesis. But, oh man, this looks like a great short setup to me. So that's BTC. But I think that there's got to be some type of crisis for Bitcoin to put in a trough. Because whatever that crisis is, it looks like it's going to be something to do with, the AI trade. Like, the more that I read about, what NVIDIA is doing, the more it starts to look extremely dangerous. All roads.
Are you using any leverage at all?
3x.
3x? Okay.
Yeah, 3x leverage. Right. So, when I take a look here at NVIDIA, NVIDIA holding its 200-day moving average today. But NVIDIA, is basically this circular financing loop that they're engaged in. Like, we've seen this movie before. Anyone who's a student of history can read about what happened in 2000. And look, like, the internet obviously was a transformative technology, but also there was a massive amount of overinvestment. And we're seeing the exact same thing now with AI. Obviously, AI is another transformative technology. But does that mean that we need to see Google, Meta, Microsoft, and Amazon spending all of their free cash flow and then also going out and borrowing to basically buy all these GPUs from NVIDIA? Is that a good idea? And then NVIDIA is actually extending credit to companies, businesses that don't generate much money, so that they can basically just take that credit and buy more chips, which NVIDIA then says, okay, look at our earnings. They're going up and to the right. Well, are those earnings organic? No, they're not. So it's like, all right, well, NVIDIA holding its 200-day moving average, you've got to start to take a look at NVIDIA's credit default swaps. So I've been seeing more and more about this recently over the last 10 months or so. Some analysts that I follow at Goldman, at JP Morgan, at Bank of America, and at a couple of small hedge funds, these guys have been flashing warning signs about these CDS and the bond spreads for these investment grade bonds that these hyperscalers have been issuing. They're starting to get to junk levels. Okay. So the bond spreads are blowing out at the same time that we're seeing CDS just basically, rip. So these credit default swaps are saying that market participants in the bond market think that NVIDIA, Google, Amazon, Meta, Microsoft, and especially Oracle, that they're not going to be able to pay back these bonds. So that's a big, big problem, because CDS tends to lead equities when it gets really extreme. And we're starting to see some crazy extremes on these credit default swaps for NVIDIA. So the chart that I've seen, Mike, for NVIDIA's credit default swaps, if we zoom out, this is the weekly chart of NVIDIA here. And I just want to make sure that we can all see this together, okay? So here's the parabola, right? Amazing parabola for NVIDIA. Now let me just delete all of these drawn objects so that we can see this. So NVIDIA's credit default swaps look like this. They start, you start tracking them in November because that's where the data starts. So it looks like this. The credit default swaps look like this. And then now, you know what they look like? That. In fact, it's not even that good looking. It's like literally like this, straight down. Like fucking, so like basically the bond market is saying, we will not allow you to finance the purchases of more chips anymore. That's what the bond market is saying for these hyperscalers. Bond investors are saying, we're not going to finance this shit anymore because there's no ROI, man. There's no ROI. So imagine if all of a sudden the entire market decides, hey, NVIDIA, show me the money, man. And NVIDIA, it seems like it's some funky accounting practices, the same as was done in 2000, where, look, if I'm NVIDIA and Mike, I lend to you, or I give you $100 billion of credit, or what they're doing with OpenAI now is they're giving OpenAI like $250 billion in credit to build a data center, maybe at some point in the future. But they've already given hundreds of billions of dollars in credit to businesses that don't make enough money to buy their chips in the first place. So if I lend you or I give you credit, and then you take that credit and buy my products, like that's that circular financing Fugazi logic right there, man. And the bond market is starting to call the bluff. So equities will follow later. And so the whole reason why I'm bringing this up is there's always some type of crisis. Midterm years are never positive. And, another reason why there could be a crisis is if we take a look at crude oil here, man, like crude, and this is crazy, okay? I'm starting to see that there might actually be the US Treasury intervening in crude oil markets, like selling crude futures. So happy poop. Thank you, Crispy. Appreciate the jewels.
You showed us the jewels and the poop.
Yeah, jewels and poop. So, dude, if we're taking a look at crude oil futures here, and this is just absolutely nuts because those crazy Houthis in Yemen have started lobbing missiles over at Saudi Arabia, hitting some of those oil facilities in Saudi Arabia. These are some of the biggest oil generating facilities on the planet. And so, you know what the Saudis did? The Saudis, they turned off those facilities, man, taking offline like 6 million barrels a day. That's massive. And so that happened just 2 days ago. And I think it's continuing. I think maybe those rockets have stopped, but that happened 2 days ago. So you got all of this capacity that just came offline. And yet crude oil dumped on the news of those attacks. Make that one make sense. And so the speculation is that the US Treasury actually stepped in and started dumping crude oil futures to get the price down. And you know what else President Trump has done? He's been draining that strategic petroleum reserve again. So we saw Biden start to drain the SPR, the strategic petroleum reserve, so that he could get oil prices down into the election in 2024. So that's what Biden did. Biden drained it a lot, but Trump has been draining it even more. So it's like, all right, well, if the SPR is getting drained and Saudi Arabia's biggest field is now offline because you got those Houthis in Yemen lobbing missiles over, attacking that oil field, how the hell does that mean crude oil down? That should mean crude oil straight up. So, these markets are bigger than any one participant. Even the US Treasury, its scale. These crude oil markets are still bigger than even the Treasury. So I'm just thinking to myself, all right, well, crude filled that gap and overshot. That's one thing about crude. It likes to overshoot to the downside and the upside. I used to trade crude professionally back in 2014, 2015. And so one thing that I've always noticed about this market, it's a lot of fun to trade when it gets volatile. So this gap right here, crude likes to overshoot. That's exactly what it did. It overshot to the upside, but it also overshoots to the downside. Now, what do we have? What formed here? Another big gap. if I was a betting man, I would say that this gap here, let me go ahead and mark that gap, that this gap right here will fill. And I mean, hey, man, like, I don't see how crude is not sharply higher. It's very, very strange to me that crude is not sharply higher from here. So this is definitely a market to watch. And with crude down, it makes sense that yields would start to pull back. And that's exactly what they've done. But yields on the 10-year put in a slightly higher high. So there's that high from back in the middle of May at, what was that, 4.690%. Yields put in a slightly higher high up here at 4.712%. So the fact that we're getting a pullback does not mean that yields are suddenly going to collapse. The thing that would make yields collapse would be the stock market rolling over sharply when investors could pile into the safety of US Treasuries. That would make yields really collapse. And that would be the crisis that we would need to see Bitcoin dump and put in its bear market trough. And that would lead the Fed to start to intervene, and then we get the next bull. But we're not there. We haven't seen it. So the 10-year pulling back today, crude oil off 5.3%. In fact, crude over the last 3 sessions is off by 17% almost. So this has been a big move for crude. But if we just go ahead and measure this move from $67 to $93 and change, that was a 40% run out of crude. So for crude to give back half of that rally makes sense. I don't think the rally's over yet though. So I'm really watching crude closely. I'm watching yields on treasuries extremely closely, especially since we're going to have a Fed meeting. The next Fed meeting is tomorrow. So we're going to have Kevin Warsh tomorrow, and the way that he sounds is going to be really important. But as of right now today, there's been a lot of talk on the street that potentially he might step in and raise rates, okay? Like raise rates 25 bips, 25 basis points. Right now, there's a roughly 30% chance that happens. But why would he raise rates? Well, if we take a look at the 2-year, so the Fed tends to track the 2-year. So here is the 2-year US Treasury bill. Now, this is the bill. If we invert this scale, then we can see the yield. This is a rough estimate of the yield on 2-year treasuries. Now, the Fed funds rate is down here. The 2-year is up here. There's a pretty big spread between where the yield is on the 2-year and where the current Fed funds rate is. In fact, we can overlay this on top. So if I just go ahead here and add the Fed funds rate on top, so I think it's Fed funds, I think that's what it is, Fed funds, there it is. So new price scale, boom. So check this out. Look at how these two items track one another. So I just want to make sure that we can all see this. So that's 0%, that's ZIRP right there, that zero interest rate policy. And so if I just go ahead and remove that orange line so we can see this, and I'm going to change the color of this to white so that we can see this all a little bit more clearly. So the Fed funds rate here is in white, the white line, and the Fed tends to lag the market. So the market will move first, the Fed will react. So the Fed is slower to react. The 2-year is breaking out, man. The yield on the 2-year is pushing sharply higher while the Fed is taking no action. So a so-called hawkish pause. So what happens if Kevin Warsh comes out tomorrow and hikes rates? I think that's extremely unlikely. Even though there's a 30% probability of it right now, I think that's very, very unlikely. So yeah, this is something to watch. It really, really is. So tomorrow we're going to have Chair Kevin Warsh come out and he's going to say whatever he's going to say. So that's going to be, of course, market moving. Now, what happens to Bitcoin on Fed days? Bitcoin tends to dump on Fed days. So we've got a Fed day tomorrow, everyone. Wednesday, that's going to be July 29th. But what else do we get tomorrow, Mike? We get big earnings, big earnings, dude. So don't we get like Amazon and Apple tomorrow? I think. So
Tomorrow, Wednesday, yeah, I think so, or maybe that was Thursday.
Yeah, so Amazon's Thursday. Meta, I think Meta is tomorrow. Is Meta tomorrow? Yeah, we get Meta tomorrow, and I think we get Meta and Microsoft tomorrow. Yeah, so tomorrow we get Meta, Microsoft, and the Fed. Great. And then on Thursday we get Apple and Amazon. So we get, the four big tech names plus the Fed this week. So tomorrow we get the Fed, Meta and Microsoft. Thursday we get Apple and Amazon. So that's absolutely going to move markets. And we get that in the context of the NASDAQ starting to pull back a little bit here. So yeah, man, what you got going on here in news?
All right. So, this is something that really caught made my ears perk up. But the NASDAQ pilots tokenized collateral on Canton Network as Q2 earnings hit record highs. So, those that don't know, the DTCC launched, tokenized assets on Canton in a soft launch. In October, they're slated to go for a full launch. But the NASDAQ disclosed a successful Canton Network tokenized collateral pilot through its Calypso platform during a record Q2 of 2026 earnings call, as the exchange operator reported 1.5 billion in net revenue, 1 trillion in index assets under management, and the largest IPO in history. NASDAQ has successfully piloted tokenized collateral trades on Canton Network, transmitting tokenized money market funds as collateral through its Calypso platform, alongside 2 of the world's leading asset managers, the company disclosed during its second quarter 2026 earnings call. The CEO described the pilot as proof of concept, demonstrating how Calypso, already used by hundreds of firms globally for collateral management, could evolve into a collateral network capable of moving assets in tokenized form. The guys were there that day, and they basically came out of the room going victory. Friedman said the money moved. The company said future monetization would come through a new Calypso module, effectively an upsell, allowing clients to manage collateral movement in addition to collateral management. The Canton pilot sits within a broader NASDAQ push into tokenization. Friedman noted the company is working with the DTCC on post-trade settlement of tokenized shares, and separately with Kraken on new model for tokenized equity issuance and instantaneous settlement, which NASDAQ expects to launch in early 2027. Let's see. So it says NASDAQ also confirmed it remains on track to launch 23/5 trading on December 6th, 2026 as part of its broader push towards always-on market infrastructure. So these pilots, this is very different than MOUs. This is very different than testnet. This is live, live pilots where they're basically dipping their toe in the water. They're trying it out. If everything works as advertised, everything works as it should, then they do the full launch. And that's what is happening on Canton right now, is that all of these people that have been building, all these institutions, the DTCC, the NASDAQ, JP Morgan Chase, all of these institutions and banks, they've all been building. They're all starting to launch. And as they launch, they are going to be generating fees and revenue. And those fees that are generated, we've seen, because we can go to Canton Scan, and we can see the burn mint and the Broadridge. Broadridge alone, for the most part, has the burn mint at around 0.67, 0.68. Now, when you start getting the full launches and the volumes that we are going to see with the NASDAQ and with the DTCC and JP Morgan Chase, with the what do they call them, extensions? They're not subnets.
Mainnet, mainnet extensions.
Mainnet extensions. Those are going to generate fees as well. So as we see these these pilots go into full production, we're going to see that burn mint, further accelerate to where potentially we're going to see Canton become deflationary. And if that happens, we potentially will see the price of the Canton token go up. Again, we're not going to speculate. We're not going to do any price predictions or anything like that. I mean, feel free to do so. I don't like hopium. I don't like emotions. But looking at the data, you see other projects like Hype that have that same burn mint, or that burn mechanism built in, and we've seen the positive price action it's had on the token. So, not Scoop Boy says $1. No, $3.50.
Yeah, dude, I would not be surprised to see Canton CC do something like that over the course of this next bull, man. And so I bought a Cypher Rock this morning, and I paid for the damn thing using USDC on Arbitrum, and I used Now Payments. They've got an integration with Now Payments, and so my payment apparently like fucking went into the ether or something. So I've been trying to get in contact with Cypher Rock's customer support so that I can like actually get that order in. But yeah, man, like I'm really, really excited to get that Harbor wallet. And the reason why I picked up the Cypher Rock is because it's the only one that I was able to find that natively supports Canton. So I really need to be able to self-custody CC. But yeah, man, I'm super excited to be able to use this stuff natively. I would not be surprised to see CC, that token, rip and run during this next bull cycle. I mean, right now it's trading for 11.7 cents. And, I was saying that I was going to start to initiate a position down at 10.6 cents. We're getting pretty close. Yeah. So it's just about buy time for me. Maybe over the next 8 weeks, CC makes a move down towards like 10 cents or so. If it does, I'm definitely opening a position. Just spot, man. I'm going to hold this stuff spot, and then I'm going to use, some of the protocols that we've started to talk about on the channel, so that I can borrow against it. Really looking forward to being able to do that.
I think that you're going to like what you see on, on Cancore, because it looks like that with Cancore you can loop. I wanted to say it was Cancore. I look at so many projects, and and I was doing the deep dives this morning, so they're kind of blending together. It's either Helios or Cancore. They have vaults that automatically loop for you. So kind of excited about doing the deep dives on these. But before we do that, I want to touch on this. So Canton Strategic Holdings sells Gravitas to focus on Canton Network. So it looks like Canton Strategic Holdings sold its biotech R&D arm, Gravitas Life Sciences, to Gravitas Collective Corp. The board approved the deal on July 17th as the NASDAQ-listed company narrows its operating strategy around Canton Network. So it was a unanimous. Canton Strategic Holdings said the milestone builds on recent progress in its operating business, including the launch of its locking service in June 2026. Together, the two developments show the company putting its Canton strategy into action while establishing a clear direction for its next phase. For Canton, that strategic clarity is constructive. A NASDAQ-listed company placing the network at the center of its operating direction gives the ecosystem a more visible connection to public markets and a clearly defined corporate participant working towards Canton-related growth. Let's see. Okay, so why this transaction is positive for Canton? The clearest benefit for Canton is the company's increased concentration on the network. Focused participants can communicate their priorities more clearly, pursue operating milestones with greater consistency, and build a stronger identity within an ecosystem. by separating from the unrelated biotech business, Canton Strategic Holdings has made its intended role within the Canton Network easier to understand. So it looks like they have a stock, CNTN. David,
CNTN.
yeah, do you
Canton.
want to
CNTN.
pull that up and see what the price of it did around this move?
Sure. So let's take a look at this. So what's the ticker for that stock there?
CNTN, Charlie November Tango November.
Canton Strategic Holdings Inc.
Yep.
Okay. So zooming out, this looks like doo-doo.
It does.
Yeah. So going back to November 2023, I wonder what these guys were up to in November of 2023. But if I just go ahead and grab a trend line tool and use the all-time high as the anchor point, extend to the right, I mean, if we go ahead and grab a horizontal and throw down a horizontal, so yeah, what we've got here is support at $1 and resistance up here at, let's call it $5. If I throw down a 200-day moving average, then yeah, it's trading well below that 200-day moving average, which comes in at $3.30. This is really not what you want to see, but that makes a lot of sense, right? Because all of these treasury companies, man, whether it's a Bitcoin treasury company or an Ethereum treasury company or a Canton treasury company, they all kind of sort of look the same, down and basically like down only. Like if you take a look at mine Immersion Technologies, this is Tom Lee's outfit, and so this one here, they announced that they were going to buy 5% of the Ethereum supply, big pump on that news, and then down only. So yeah, trading for $17. And then of course, if you take a look at the OG, that's MSTR Strategy Inc. This is, for all intents and purposes, nothing but levered Bitcoin. So yeah, levered Bitcoin is down. And I'm just thinking to myself that, MSTR might make a move down towards $60 or so by the start of the fall. And yeah, Scotty D, they are all hurting, no doubt about it. But I think that when the next bull market starts, that these levered stocks might actually do well as long as they don't continue to issue more shares at the market. So what a lot of these companies have done, especially Bitmine, is they just issue shares ATM so that they can raise cash to buy more ETH or buy more Bitcoin or whatever. So that's dilutive. It dilutes the shareholders. Now, it might be accretive in ETH terms, but dude, like that's kind of a fugazi, I think. Why wouldn't you?
I know I'm up on my STRC investment.
Yeah, so STRC, Saylor actually came out and purchased STRC with some of the cash that he raised by selling Bitcoin. So I think they sold Bitcoin, and also I think they sold some MSTR at the market, and they used that to buy STRC. They're trying to support the share price here because as long as it trades under par, which is at 100, there's a lot of people that are underwater on those positions. So, if it's trading at a 11% or 12% discount, then, that's basically an entire year of yield right there.
Yeah.
But if you buy it at that 11% or 12% discount, and then it regains that peg at 100 or it regains, par value, then it's like you're adding an additional year to your the performance of whatever your position is. So that's pretty cool. And just over the last couple of minutes here, it looks like Bitcoin is making a move up towards that level of resistance. And so if we take a look at this, there we go, sitting now at resistance. let's see if Bitcoin's able to break out back above this little level of resistance that I've drawn in here. So if it is able to break out here, then I would expect that 200 period moving average on the hourly to act as some type of resistance. So now that it's the end of July, we've got 2 more days in the month of July. We've got the Fed tomorrow, we've got Meta and Microsoft tomorrow, and then we've got Apple and Amazon on Thursday. So that's definitely going to, basically determine the direction of the market for the next couple of months into October. So yeah, this is going to be really important. But here's the thing. We've got this high right here that was put in at 66.9. So that was the high, which, by the way, was a lower high than this high. And that's why I've got this marked off with a horizontal. So that high that was put in the middle of June came in at 67.3. The high that was put in just a couple of days ago on the 21st was at 60, let's call it 67. So 67.3 is higher than 67. So this is a slightly lower high. And now we've got another slightly lower high here at 65.7. That was put in on Monday of this week. So the reason why I'm pointing out these slightly lower highs is it looks like we might be starting to see Bitcoin roll over. So even if it rallies up towards 65K, I would be very, very careful buying Bitcoin here into the Fed day tomorrow, into all these big tech earnings throughout the rest of this week. So yeah, there is, I think, a significant period of risk for the next 8 weeks leading into October. And I see what Scotty D is saying in the chat, that Tom Lee has, I wouldn't call it returns. He hasn't seen any positive returns. He generates yield from staking his ETH. And that yield is like $300 million a year right now, which is a lot. That's a lot of yield. And so what he's doing with that yield is he's funding a company. What's it called again? Like they created a new company or foundation. It's like called ETH something or other, where he's taking all that yield and using it to like fund ecosystem development. Big positive. It's a big net positive.
I vaguely remember talking about that.
And same thing with Saylor. Saylor's doing the same thing. He, I think funded to the tune of like $15 million a Bitcoin like ecosystem development company. So, I mean, this is great. And also, did you see that post that Saylor made a couple of days ago saying that he was going to need another color on the chart? There's been some people speculating that Saylor may have actually bought ETH.
Oh, yeah?
Yeah. So I don't know. Maybe he just meant that, he bought Stretch. I have no idea. But we'll find out at the end of this month when the 10K comes out. So yeah, looking at Bitcoin here, though, back up to 64. Earlier today, it was down at 62.7. So we're seeing a nice balance, but the break of trendline support and the slightly lower low than this low, which was put in on Friday of last week at 63.8. So slightly lower low. We've got a couple of lower highs. So this chart is telling me that, maybe the high is in for Bitcoin for this immediate term high. I really do think that we're going to see Bitcoin move sharply lower over the next 8 weeks into October. And
bought Aerodrome.
He bought Aerodrome. No way, man. No way. Maybe
I'm gonna have to get with you after the show, David. I'm looking at Hyperliquid. To be honest, I've never really used it, and I'm trying to figure out how to do like can you even do like 3x leverage? All the different things I see is like 40x, 25x, 10x.
Sure. Yeah, I'll show you. So in the spirit of complete and open transparency, I'll just show one of my accounts here. So this position, it's roughly 30K right now. I'm flat on it. It's down $75. So I expect this position to, obviously I wouldn't be in it if I didn't have a thesis, right? So my thesis is I think BTC moves down towards 50K or slightly below 50K. So the way that you change your leverage, Mike, is up here in the order entry form. So you see I'm hovering over it right there. So if you're trading, let's say that you want to trade Bitcoin or whatever you want to trade, just go ahead and click.
Your like whole thing looks different. Like your Bitcoin chart looks different. Like I'm not seeing the same candle patterns. I'm on trade and market, and like I'm not seeing.
Okay, so you might be looking at spot. So if I'm, do you see my screen here where I've got BTC, USDC, and I see all? You see that? Or it says all.
Okay. I don't. Yeah, I was in the wrong. But yeah, still, like I'm looking at your chart because like here I'll show you mine. That's weird. So like, see, this is like what my Bitcoin USDC looks like.
Yeah, so you're probably just looking at a different time frame than I am. That looks like, okay, so that's the hourly
I'm
time.
an idiot.
So this
never mind. Let's not do this live.
Yeah, so I'm looking at an hourly here.
Yeah.
So I'm looking at an hourly, and
I should have looked at that. I was looking at a daily.
Gotcha. Yeah. So on the hourly, this is what it looks like. And then to change your leverage, you just navigate up here to the top right. You click on that leverage, and then you can adjust your leverage there. So yeah, that I hope that helped.
That helped immensely. So let's start with Helios for the deep dives.
Let's hop in.
Helios looks interesting, and I think that you're going to like what you see.
Okay, so Helios. Let's see. So we're going to run through Helios and Cancore today. So I'm going to go ahead and click through to Helios. I'm going to share this to the source room in case anyone wants to take a look through this, since we're going to be running through this piece of deep dive research right this moment. And I've actually I'm going to have to redo my screen share so that everyone can hear this. But before I do that, Mike, so it's Canton News, right?
Yeah.
Canton News. Yeah, cantonnews.org. Okay. So on cantonnews.org, I think if you go to community, or what am I looking for here? Featured projects, right? And then I'm looking for Helios. Type in Helios. There it is. So borrow USDCX against CC. Awesome, man. See, this is, oh, look at that. Get paid in CC for Canton content. That's so cool.
I toiled over that, but it goes against our ethos, where, getting paid to talk about a project.
I hear you. Yeah.
I looked at it this morning, and I just, that's our whole thing is we will not get paid to talk about a project. As bullish as we are, I mean, I'll do it for free. It would ruin our credibility. I can't do it.
I agree. So Helios Finance, borrow USDCX against CC and spend through a Canton Coin backed credit card. That's pretty cool, man. That is definitely pretty cool. So let's see here. Key benefits: borrow USDCX against CC collateral, Canton Coin backed credit card positioning. That's pretty darn cool. Spend anywhere Visa is accepted. Okay, rewards-oriented card and lending experience, documentation available through their Gitbook. Awesome. Let's click through to visit the website. Before we go through and actually take a look at that piece of video content and learn a little bit more about this, I just kind of want to explore it a little bit. So this looks like it could be almost like a neobank. Yeah, something like that.
Yeah.
Okay. So the Canton Neobank, the first permissionless lending protocol and Canton Coin backed credit card. Sweet. So I'm going to join the waitlist real quick. I'm going to go David at the node.pro. I just want to join. Yeah. I'm not using Discord because Discord is gay as fuck. but I'll put in like fake name 1. Okay, and then my Telegram username, I do use Telegram, absolutamente. I forgot my Telegram username though. Let's see here. I'll do this later. So Canton Neobank. Let's see here. HODL, borrow, spend. Sweet. Borrow, earn yield, spend without selling, and loop. Awesome. I like it. All right. Let's hop in here to the piece of deep dive content. I'm going to go ahead and restart my screen share so that we can hear this thing. And let's hop to it. Here we go. Add to stage. Perfect. And let's learn about Helios.
For digital asset holders, accessing real-world purchasing power presents a strict mathematical dilemma. Converting a digital portfolio to fiat requires selling the underlying assets, which instantly forces a taxable capital gains event and halts ongoing yield generation. To avoid selling, holders often turn to cross-chain bridges to borrow against assets on decentralized networks. But moving capital across these network bridges exposes users to severe centralized custodial vulnerabilities. Wrapping native assets, like converting Bitcoin into WBTC, strips the user of self-custody. It requires handing over private keys to a third-party entity and trusting their localized security practices to back the synthetic representation. On the institutional side, the problem shifts from custody to compliance. Traditional public blockchains broadcast all transaction state changes globally to validate the ledger. For regulated institutions, this creates an absolute privacy barrier, as they legally cannot broadcast client financial data to a public network. The decentralized finance ecosystem effectively forces capital allocators into a trilemma. Participants must choose between regulatory privacy, retaining their self-custody, or achieving capital efficiency. Until all three can operate concurrently, mass institutional adoption remains mathematically blocked. Helios Finance is a money market protocol engineered specifically to eliminate both centralized bridges and the reliance on speculative reward tokens. This structural blueprint illustrates how Helios solves the liquidity problem. It allows users to extract non-taxable fiat liquidity while keeping direct exposure to their underlying assets and maintaining native staking yields. Rather than trying to force all assets onto a single chain, the protocol operates simultaneously across two distinct execution environments, handling highly differentiated asset classes natively. The left pillar is the Canton Network layer. This environment is built entirely for tokenized real-world assets, providing the strict compliance and privacy controls required for institutional composability. The right pillar is the middle execution layer. This environment is designed exclusively for native Bitcoin, allowing for smart contracts and borrowing without bridging assets off the base layer or relinquishing self-custody. By isolating these base layers, Helios resolves specific compliance and custodial bottlenecks natively. Only after those base layer constraints are solved does the protocol merge that liquidity into a unified consumer interface. Deployed directly on the Canton mainnet, the institutional side of the protocol uses Canton Coin as the base collateral to back open, over-collateralized stablecoin lending pools. This network topology maps Canton's global synchronizer infrastructure. It functions as a selective filter, allowing specific contract state changes to remain encrypted. Because of this, Helios hosts permissionless retail lending directly on the same base layer as highly permissioned institutional credit markets. Inside these private execution environments, institutional participants lend and borrow complex tokenized financial.
David, really quick. I mean, wouldn't that give a much deeper liquidity with the institutional liquidity and retail liquidity all coexisting?
Potentially, but it also could open up some risks. So I think that, so far what I'm seeing is that this looks like a neobank to me. This looks like a Canton native neobank. Yeah.
Yeah.
Instruments, including tokenized money market funds and bank deposits and repo agreements, without violating global broadcast regulations. Connecting these private actions is Canton's atomic transaction composability, a native mechanism that ensures multiple state changes occur simultaneously or not at all. If a user locks tokenized U.S. treasuries to borrow USD-backed stablecoins, The collateral lock and the stablecoin minting happen in exactly the same computational block. This synchronous settlement ensures that neither party is exposed to settlement lag or cross-chain vulnerabilities. It eliminates global state broadcasting while maintaining absolute mathematical certainty of the trade. On the other side of the protocol sits the middle execution layer. Middle is an Ethereum virtual machine compatible environment, but it is anchored directly to Bitcoin Layer 1. Traditional Bitcoin lending requires locking assets with a centralized custodian. Middle bypasses this by allowing Ethereum-style smart contracts to read native Bitcoin state changes directly without ever relying on a synthetic wrapper. Users commit native Bitcoin into self-custodial vaults governed by smart contracts. The assets never leave the base chain, and users retain their private keys. The dynamic loan-to-value formula determines borrowing capacity natively. LTV equals USD stablecoin debt divided by
Surprised
locked
you don't have
Bitcoin
something to say
collateral,
about that.
multiplied by Bitcoin's price. An aggregated oracle continuously updates this spot price, adjusting the user's available fiat credit line second by second. Concurrently, Helios implements native staking as a service. The locked collateral can be delegated to MIDL's delegated proof-of-stake consensus network, earning base consensus rewards while acting as collateral for the loan. By combining EVM programmable logic with native Layer 1 state verification, passive Bitcoin holdings are transformed into yield-bearing assets, all while strict private key control remains with the user. Helios Finance operates without an active governance token. It completely rejects inflating a proprietary, speculative token to generate perceived protocol value.
Good.
Instead, value accrual is driven by structural fees embedded in the product, percentage spreads on lending interest rates, annualized management fees on yield vaults, and Visa transaction interchange revenues. The protocol's curated yield vaults automate yield generation across 3 asset categories. Stablecoin vaults fund over-collateralized loans for variable interest. Real-world asset vaults direct liquidity into tokenized treasuries. Finally, delta-neutral vaults utilize automated derivative hedging to yield returns while insulating collateral from price volatility.
Awesome.
Because revenue stems from real interest spreads and
So think about how much different that is than EtherFi or Plasma. We ran some deep dive research on both of those neobanks, and they both make use of highly inflationary governance tokens, kind of, sort of. So
Well, it looks like instead of directing, that liquidity or that value to try to prop up a token, like it was saying, that it just routes those fees and stuff to increase the yields on
I mean, this looks like one thing that I've noticed, Mike,
sustainable.
about it, yeah, it looks like, and one thing about Canton protocols is that I really can't say that I have seen Fugazinomics from a Canton protocol yet.
Not yet.
I haven't seen it. Like on Ethereum or Solana, that's mostly what you see is Fugazinomics.
And I think that's one of the benefits of a bit of centralization. I mean, because to be a validator, super validator, to launch a DApp, anything like that, you have to be sponsored. You have to kind of go through a vetting process. I think when it comes to finance, I think that's a good thing.
I think that I really like the freedom that comes with permissionless building.
Oh,
but
absolutely.
like, you've got to understand these economic models, man, these tokenomic models. And I mean, most of the stuff that we've reviewed so far on Ethereum and Solana and Sui and Tron, and I mean, dude, basically every chain, like, most of it's a vapor, and a lot of it, some of it, is just straight up scam.
Yeah.
So but I don't see any of that happening on Canton. Yeah, Ponzi-nomics, Fugazi-nomics, Crypto-Stevo for sure, man. But this stuff on Canton looks pretty darn good. So, yeah.
Change fees, the protocol creates a predictable economic flywheel based on capital utility, severing reliance on tokens. The end-user application of these layers is the Helios Reserve.
Yeah.
That actually gives, I think, potentially more value to the CC token. Because if you're wanting to kind of invest in the ecosystem, it forces you to buy the CC token instead of like a Helios token.
So I'm pretty sure that all of these Canton protocols accrue value to CC. All of them.
No, absolutely. Because if they're operating on the network, then they're generating transactions on the Canton network. It's generating fees that go to that burn mechanism.
Yeah, exactly. I think that it's part of that virtuous flywheel that they've been able to generate over on Canton. But as of right now, it's not quite enough. It's almost there. And we could just take a look at that just really quick before we continue the video content. But if you go to Canton Scan and you click on statistics, you'll be able to track the burn mint ratio. So my thesis here, Mike, is that when, and I think it's a when, not an if, I think that when this burn mint gets above a 1.0, then I think that, dude, this thing just starts to rip higher. And what I mean by that is I think the US dollar price of the CC coin starts to rip. But we haven't seen that yet. So here's CC on an hourly. And on the hourly, since the beginning of June, it's been down only. We got that one pump on the DTCC launch. But the fact that there was even this pump on that DTCC launch of tokenized equities, I think that this pump had more to do with the pump in BME than anything else. So I really do think that if this gets above, or when this gets above a 1.0, that we start to see like major moves in US dollar terms from that CC coin. But we're not quite there yet, So if that happens, and I think it's a when, not an if, then it wouldn't surprise me to see CC up above $1. So, you pick some up at 11 cents, and hey, just speculating here, but that would be a nice 10-bagger just to get to $1.
Well, and really quick, Crypto Stevo, Canton needs to improve their marketing. Honestly, I not often I disagree with you. I don't think they need marketing. I mean, their business, their demographic is institutions and banks. They obviously know about Canton. I mean, they're all building, they're all adopting. I don't want them to market to retail. I don't want the hype. I don't want to me, I think it cheapens it. I would rather that they just keep building a solid ecosystem, onboarding, solid institutions and banks, and, doing what they're doing, because whatever they're doing it right. I kind of think that let the data, let the burn, let all of that speak for itself. Let the markets decide what this asset is worth. I don't want to see speculative pumps. I want good, solid, sustainable growth, personally.
I think that that's exactly what we are seeing now. Even though the token's going down, and look, the token going down tells you a lot. And what it tells you is that burn mint is not where it needs to be. So that burn mint gets above a 1.0, and then, dude, I think that it's going to run. And a 10-bagger out of Canton would not surprise me at all. To see Canton CC go from 11 cents to $1.11, what would that do to the market cap of CC? Isn't the market cap of CC like 6 billion, right, Mike? Something like that. $5-6 billion, something like that. So I think that if it's able to get that BME up above 1.0, it wouldn't surprise me to see that market cap really start to run, because, hey, there's real economic value being driven there. So it's not just like some inflationary, flywheel. It's not. It's based on real economic value in that Canton ecosystem. So, and Helios is a good example. I just wish that this stuff worked better. Like, all of these dApps on Canton right now, it seems like they're all kind of sort of in beta, or like kind of work, but some features don't. So, that's why I bought a Cypher Rock today, so that I can start to use this stuff natively. Like I really need to be able to use these dApps on Canton natively to be able to say like, hey, this one's good, this one's not, whatever. But until I can do that, it's just kind of, I'm in the learning phase right now, you know?
Credit card, a non-custodial consumer payment off-ramp built on top of the protocol's money markets. Standard crypto debit cards operate as prepaid accounts. They require users to sell digital assets, trigger taxable events, and load fiat before spending. The Helios card operates as a revolving credit facility backed by digital collateral. Users lock Canton Coin or native Bitcoin into vaults to receive a dynamic USD credit limit. As cardholders spend via Visa rails, the locked collateral continuously earns yield to offset finance charges. Finally, accrued debt is repaid manually or auto-liquidated using generated yield. The result is a system that allows users to capture real-world purchasing power at scale without triggering a taxable capital gains event or selling their underlying asset positions. Operating dual execution environments and handling cross-asset settlement inherently introduces significant systemic risk. To manage this, the protocol's core codebases underwent independent security audits by Web3 firm Immunify, focusing aggressively on the low-level asset handling logic within the collateral management contracts. This isolated module highlights the change collateral function, dictating how user funds are locked and adjusted. Auditors paid specific attention to this line of code. They evaluated severe edge cases, like mid-transaction state changes or a user submitting excess native Bitcoin, verifying mathematically these anomalies cannot result in locked or misallocated user funds.
Good.
This static contract security is supplemented by a secondary layer, 24/7 on-chain risk engines that continuously calculate real-time loan-to-value metrics, executing automated partial liquidations the second collateral values drop below predefined safety margins. Hardware and network architecture mean very little if the base contract logic is flawed.
Right.
Mitigating smart contract vulnerabilities at the asset handling level remains the absolute bottleneck for establishing trust in decentralized credit facilities. Helios Finance represents the technical convergence of institutional privacy infrastructure and native Bitcoin credit markets. Looking at the completed architecture overview, the core utility becomes clear. Accessing fiat liquidity globally without incurring tax events, centralized bridges, or sacrificing staking yield. Scaling through 2026, success depends on sustaining deep liquidity across these distinct vaults. It will also require continuous adaptation to navigate the complex and frequently shifting global regulatory requirements governing crypto-backed credit products. By structuring its environment to solve the base layer constraints of institutional privacy and secure Bitcoin bridging, Helios provides a durable blueprint for the next decade of decentralized capital management.
Very cool, man. So this looks like it's one of the first Canton native neobanks.
Yeah.
And, you know, I got to say, I wasn't quite convinced that it's true native Bitcoins on here. I think it's like they call it like these staking versions of Bitcoin. But hey, man, this is solid. This is super solid.
And I don't really caught it because I think you went to go get more coffee or something. But when it was talking about that, there's no need for synthetic wrappers and stuff like that for Bitcoin on this.
So let's dive into that a little bit more deeply here in the written report. So you see this, everyone, where you can actually see this in the written report, where you've got little buttons here that you can click on. So Bitcoin and MIDL layer. This is awesome. Like anyone who wants to learn about this stuff, it's over here at the Node.pro in the Intel library. Yeah, so let's see here. So to address Bitcoin liquidity, Helios utilizes the MIDL execution layer, which is an EVM, that's Ethereum virtual machine, compatible environment anchored to the Bitcoin layer 1. Okay, so this means not real Bitcoin. That's what this means. So bridgeless lending. Unlike protocols that require wrapped tokens like WBTC, that's BitGo's product, MIDL allows smart contracts to read native Bitcoin state changes directly. Okay, maybe I was wrong. This is good. So self-custody. Users lock native BTC into smart contract vaults without relinquishing private keys or moving assets to third-party custodians. Okay, awesome. So I was wrong. This is great. See, look, I love being able to have a hypothesis and then disprove that hypothesis. So my hypothesis when I first read this,
that's the power of facts and logic, is that, because I can feel one way about something, David can feel a totally different way, and we can yell and debate about that all day because those are feelings. But facts and logic, it's just, when you cite sources, that's why we're so steadfast in that. Is if you cite good solid sources and you can show that your thesis is based in fact, it's based in data, good solid data, then it can't be argued with.
And so, Crypto Steve-O, don't you worry, brother. No feelings over here. Cold as fuck, boy. So, yeah, man, collateralization ratio calculation. So Bitcoin-backed loans are managed via dynamic formulas where the collateralization ratio is determined by the real-time Oracle price of Bitcoin against the stablecoin denominated debt. So all that means is if you put up BTC, like it's basically staked self-custody BTC on Helios. If you use that as your collateral asset and then you go and you want to spend against that, you're borrowing USDCX against your staked BTC. So it's going to calculate your collateral ratio there. All good, man. All good. And Crispy, thanks so much for the jewels, brother. Appreciate that. I don't know what a silver star is, but that's awesome. I'm assuming that you wrote that in there. So that's great, man. Thank you. Really do appreciate that stuff. And, just running through these curated vaults. Okay, so it looks like I've got to fix the logic in how tables are displayed in the written content here. But it looks like we've got a Helios Reserve credit card. Dude, this is awesome. So I can't wait to get that problem resolved with my CypherRock X1 because I paid for this thing using USDC on Arbitrum and sent the required amount of USDC on Arbitrum, but the order didn't confirm and it gave me an error. So I'm going to get that worked out today. Hopefully, I hope that CypherRock actually has legit support, because as of right now, I haven't heard anything back from CypherRock about my order. And I sent them a couple of emails earlier today. Haven't heard anything back yet. So that's not a good sign. But
quick shout out to Leilani Farms. He's a guy that I go back and forth with on X quite a bit and posts some really great content on Canton. He's a brother from another mother, from over in Hawaii. That does some badass surfing. He's shared some photos with me where he's caught some gnarly waves. So, shout out to him.
So yeah, shout out Leilani Farms, man. That's awesome. Aloha. And I'm curious. You see, I bought the CypherRock thing because I was pretty sure that this is the only hardware wallet that natively supports CC. But what about Tangem? Does Tangem natively support CC? I don't think it does. Because I've got a bunch of these. I really like the Tangem cards. These are super cool. But let's see here. Where can I see, what coins it supports? I think if I click on ecosystem, it should bring me to whatever coins it supports. But let's see here. Where can I see that? So I bet you if I scroll down to the bottom, then I should be able to find out wallet for assets. Okay, so what coins does it support? Does anyone in the chat know? What this supports? Okay, there we go. Canton, no results. CC, no results. Yeah, Tangem does not support Canton natively. I believe neither does.
I don't think any of the major hard wallets do.
No, I'm pretty sure CypherRock is the only one. And as of right now, this is look, customer service is super important. And I haven't gotten a response from anyone on Telegram. I haven't gotten a response from anyone via email yet. And like, what the hell, you guys? Like, come on now. Like, email me back, So let's go ahead and bring it back to the Intel library. And let's take a look at that next piece of deep dive content. So we just took a look at Helios Finance. I think it's Helios Finance, right, Mike? Or is it just Helios? No, it's Helios Finance.
Yeah.
All right. So now let's take a look at Cancore. So Cancore is really cool. I was looking at this thing yesterday as I set up that Loop wallet. And what I was looking for with Cancore is...
I think Joseph is having a stroke.
Oh, yeah. Let me just say XRP 3 times. XRP, XRP, XRP. And he shall appear. Yeah, man. But doesn't Tangem only support ETH-based coins? No. So, Joseph, Tangem has a really, really wide range of coins that it supports. In fact, Tangem is one of the only...
8,000.
Yeah. And Tangem's one of the only hardware wallets that supports BitTensor Tau natively also. So here's Cancore. Now, the reason why I was excited about and continue to be excited about Cancore is that it looks like I can use Cancore to permissionlessly, to permissionlessly buy CC. So if I've got, I don't use TradFi banks like ever. I do my very best to never use TradFi banks. I live banklessly in crypto and DeFi full time. That's what I do. So I want to be able to go from, let's say I've got stables on an EVM chain. Let's say that I've got stables on Arbitrum as an example. And I want to be able to use those stables on Arbitrum to buy CC. I don't want to have to use a centralized exchange. I don't believe in them. So that means I've got to be able to do that permissionlessly using DeFi rails. How do I do that? Well, I think that Cancore provides that rail. So if I click Launch App, and then I want to continue with Loop Wallet here. So I set up a Loop Wallet yesterday just for the purpose of using this. And there we go. I sign in. Awesome. Okay, done. So I just signed in with my Loop Wallet. And you can see I'm signed in up top. I want to go to Trade and New Trade. So I'm going to swap USDC on Arbitrum for CC on Canton. So if I want to swap $100 of USDC, I would receive 852 CC. And it looks like this is completely permissionless. So that's why I was so excited and continue to be excited about Cancore. Because if I can go directly from USDC on Arbitrum to CC on Canton, receive that in my Loop wallet, and then again, Loop is permissionless and self-custody. So if I've got CC and Loop, then I can send that to my hardware wallet, that CipherRock, if I ever end up receiving the damn thing. So, yeah, I'm sure that I will. I'm going to be patient with those guys at CipherRock. But if they don't respond to me over the next couple of days, I'm going to be pissed. Okay, let's go ahead and learn a little bit here about Cancore protocol.
Modern financial architecture is split across a deep fracture. On one side, public networks are saturated with liquidity, but offer no privacy. On the other, enterprise ledgers are built for confidentiality, but remain entirely isolated. Public smart contract platforms like Ethereum and Solana offer deep composability, but their transparent design is incompatible with institutional requirements. Every trading strategy, counterparty identity, and execution term is permanently visible to the entire market. Private enterprise ledgers solve the transparency problem by strictly controlling data access, but this privacy comes at the cost of utility. These isolated execution environments trap capital, creating deep liquidity fragmentation. Standard industry attempts to bridge these worlds involve mint and burn wrapped tokens, or multi-signature validators. For regulated institutions, these introduce unacceptable counterparty exposure and concentrated smart contract vulnerabilities, where intermediaries take custody of the assets. The Canton Network operates as a specialized alternative. It is a privacy-enabled blockchain protocol tailored for regulated global finance, constructing a virtual global ledger where participants retain strict control over their data. Built on Canton, Cancore functions as a non-custodial settlement layer. Its purpose is to bridge Canton's permissioned environment with external public chains without relying on intermediary custody providers. Cancore allows institutional assets to remain natively stationed and self-custodied within Canton's privacy-preserving layer. From that position, it interacts with public liquidity across the Ethereum network, the Solana blockchain, and the Open Network. Integrating regulated entities into decentralized finance requires a mechanism for atomic settlement across trust boundaries. This requires a complete departure from the vulnerabilities of wrapped asset bridges.
Right. Okay. So that is the important bit. Atomic settlement without wrapped asset bridges. That's why I'm able to, I think, and I'm going to test this out. Maybe not today, because I think that CC probably has more downside ahead. So I don't really want to be swapping into CC if I think it's going to move a little bit lower. But hopefully, over the next week or two, I get that cipher rock in the mail. I'm pretty sure it's in the UK, but this bit right here in this piece of content, this is the important bit. So the atomic settlement, being able to permissionlessly bridge assets without wrapping them across chains. So that's what allows you to go from native USDC on Arbitrum or ETH mainnet to native CC on Canton. That is super cool.
The mechanical foundation of this execution relies on the Canton Network base layer, powered by the DAML smart contract language. DAML enables sub-transaction privacy. Through synchronization domains, transaction details are segregated and disclosed only to explicit counterparties on a need-to-know basis. Non-participating nodes remain completely unaware of order parameters or valuations. This table compares the structural differences across the ecosystem. Public blockchains rely on full state replication and transparent smart contract wallets. Canton relies on sub-transaction privacy and native self-custody. Cancore links the two by utilizing cryptographic proof matching and non-custodial escrow. Cancore circumvents bridged asset risk by employing hash-time locked contracts, or HTLCs, combined with zero-knowledge synchronization proofs across these domains. Tracking a standard swap, a Canton node commits assets into a native DEML escrow, while public liquidity, like USDC, commits into a mirrored public chain contract. The cryptographic secret triggers concurrent execution. If parameters fail, assets revert natively without escrow exposure. This HTLC architecture guarantees that institutions face zero counterparty principal risk. They maintain absolute legal and technical custody of their assets inside Canton, up to the exact millisecond of trade finality. Cancore's initial deployment handles high-capacity peer-to-peer atomic swaps. The 2026 roadmap transitions this focus toward automated liquidity management. This phase integrates automated market makers directly into Canton's DAML execution layer.
Okay, so that means liquidity pools. So whenever you see AMM, that means a pool of liquidity.
Deploying DAML native liquidity pools allows the protocol to facilitate automated market making while retaining sub-transaction privacy. Pool reserves and individual trader positions remain shielded from public inspection. This automated routing allows institutional treasuries holding tokenized real-world assets to tap into decentralized stablecoin pools without exposing their trading strategies.
Wow.
The protocol also integrates with BitSafe, a threshold signature Bitcoin solution on Canton. Institutions can move Bitcoin liquidity into public stablecoin pools without the risks associated with centralized wrapping services.
Amazing.
Furthermore, AcmeLend, Canton's lending protocol, utilizes Cancore's atomic swap layer. When public chain collateral values drop past safety thresholds, Acme routes through Cancore to execute automated cross-chain liquidations. The deployment of privacy-enabled AMMs expands Cancore's role. It evolves from a direct execution gateway into the primary liquidity router connecting the Canton ecosystem to public markets.
Wow.
Structuring the ecosystem's native utility token, CNRX, requires navigating institutional regulatory frameworks.
Okay, so Mike, this is what you were saying about these regulatory frameworks and a little bit of
Yeah.
centralization being a net positive, and I actually do agree with that because what we're seeing of, from all of these Canton native protocols that we've reviewed so far is that if there is a token associated with the protocol, it's not a Fugazi coin. There's actual utility in that token, and it seems like all of them drive value to CC, the Canton Coin. So let's learn a little bit here about is CNRX the coin for
Yes.
Cancore?
I believe that was what it was.
The protocol avoids distributing raw stablecoin fee transfers to passive holders. Direct cash flow fee sharing risks classifying the asset as an unregistered security under global financial laws.
Can't do that.
Instead, the architecture utilizes a two-tier value accrual model. This consists of a real yield staking pool and a scheduled protocol fee buyback and burn engine. As this flowchart tracks, 40% of all protocol settlement fees are routed strictly to active governance stakers and liquidity providers in the staking reserve pool. Yield is dispersed in Canton Coin and USDC, delivering real yield from actual network utilization. The second tier captures the remaining 60% of fees, allocating this capital to an automated buyback module that sends acquired tokens to an unrecoverable burn address. Automated DAML contracts execute these purchases across Canton native DEXs and public AMMs.
So, dude, there we go. Value accrual built right into the CNRX token. That's amazing. And that's what we see over and over again with these Canton protocols is value accrual. And unfortunately, Mike, the same cannot be said for most EVM or SVM project coins.
Yeah.
So Canton is unique in that way, in that I don't think that we've seen a Fugazi project on Canton. Not yet, anyway. I can't think of one. Every single Canton protocol that we've taken a look at has been legit with real value accrual back to CC. And if there's a utility token in that protocol, back to that utility token. This is great. This is what you want to see.
This buy-side pressure contracts the circulating supply whenever protocol fees reach specific thresholds. This ties directly into the CNRX emission architecture, which is designed to prioritize early liquidity while enforcing net deflationary dynamics as adoption scales. This equation governs liquidity emissions. The first half establishes baseline time-based decay, with E sub 0 as initial emissions and lambda as the decay constant. The algorithmic burn offset scales proportionally to protocol transaction volume, marked V sub t, pulling net emissions down. For institutional participants, holding CNRX also functions as a settlement discount mechanism. High-volume traders utilizing the Tier 3 validator staking structure can reduce their base atomic swap execution costs from 25 basis points to 5. By combining volume-based burn offsets with staking utility, the architecture creates a mathematical link. As institutional settlement volume expands, the net token supply is systematically forced to contract. The robust 2026 architecture is specifically built to support the massive movement of institutional capital into decentralized environments. The roadmap schedules Phase 4 for the fourth quarter of 2026. This phase focuses on TON network integration and operational support for tokenized real-world assets and private credit pools. The core protocol achievement rests in the elimination of the custody middle layer. By delivering non-custodial atomic swaps and privacy-preserving AMMs, Cancore allows for asset settlement without external escrow. This technical foundation is supported by an economic model that converts institutional settlement volume into tangible yield and systematic token scarcity. As traditional capital continues migrating on-chain, the resolution of the privacy-liquidity trade-off becomes a critical requirement. Monitoring Cancore settlement volumes across EVM, Solana, and Tone provides a concrete data point for measuring the scale of this institutional migration.
Awesome. Dude, this is great. I gotta say, Mike, the more that we learn about Canton and these Canton native, yeah, dude, yeah, it looks good. It looks really good, and
it's not just because I'm invested in Canton. It's just that they seem to be superior products, and I mean, we'll see when it comes to adoption, and when some of these, because both of these haven't gone live yet. we'll see, what kind of TVL they get. We'll see what kind of fees they generate. There's still a lot of question marks, but looking at the at the data, looking at the facts, looking at the deep dives, I'm definitely liking what I'm seeing.
Me too. I am too. And let's bring it back on over here to, let's see here. I want to take a look at Canton News, cantonnews.org. So I want to take a look here. We were looking at Helios Finance. Let's take a look at featured projects. Okay, so how about wallets? Because in order to be able to use any of these protocols, you need a wallet, right? So maybe what we should do, Mike, is start reviewing some of these wallets so that we can kind of demystify this for people who follow us on YouTube, on X, at thenode.pro. And then we're going to start to use this stuff natively. So I bought a Cypher Rock today, and I'm sure that it'll just be a matter of time until I get that order like ironed out. And then Loop Wallet. I set up a Loop Wallet yesterday. Loop Wallet was really straightforward to set up. But the rest of these, so we've got Arcana, okay, we've got Ascar, we've got C8, we've got Kari, we've got Wally, Wally the wallet, we got Vala, Wally. But wasn't that like one of those characters in some animated movie?
Yeah, it was the little robot.
Yeah. You got Console Wallet, and we got CC Bot. Okay, so let's take a look at CC Bot, because this, it looks like, is integrated with Telegram. Okay. CC Bot. Send crypto to any Telegram user directly via username. CC Bot was created to address one of the most persistent barriers to blockchain adoption, complexity of wallet setup and management. Alrighty, so let's see. I want to visit the website. So the first step in being able to operate natively on any protocol is setting up a wallet, right? So that's why I want to kind of start here with the wallets so that we can figure out like, okay, which ones are best, which ones are easiest to use, which ones are most secure, because that's always the way that I judge a protocol when I'm first getting used to it, is through the wallet interface. Like, do they have legit wallets or not? And I gotta say, most chains, like, even good chains like Tron, those Tron wallets suck, man. Sui wallets leave a lot to be desired. Solana with Phantom's really good. But on EVM chains, you got Ravi. MetaMask has gone through a big upgrade. MetaMask doesn't suck anymore. Bitcoin, there are a couple of okay Bitcoin wallets. So that's why I'm so interested in these wallets here. So CC Bot wallet. All right, great. Self-custodial wallet on Telegram. And I'm assuming for CC also. Oh, join the waitlist. See, this is something that's so frustrating, is that like every time I get excited about something on Canton, it's like, just kidding. Join the waitlist.
It's not live yet. I mean, there's so much that's being built that's not live, and a lot of this is all stuff that's going to generate fees and contribute to the burn. If we're sitting at 0.7, and all of these DeFi protocols, all these wallets, all these different dApps that are being developed and they haven't gone live. I mean, imagine what that burn is going to look like when all this stuff goes live.
Yeah, so if the burn is sitting at 0.7 and the only thing that you've got is like
is Broadridge,
is you got Broadridge and just like a test version of Broadridge too.
Yeah.
Imagine what could happen if this actually starts to get adopted. It looks like it is too. Okay, so CC Bot not live yet.
Well, check this out. I found this earlier. This Macau mining built on Canton, building the intelligence layer of the blockchain economy. We develop AI-driven systems that interpret, connect, and coordinate blockchain activity, turning decentralized data into enterprise-ready intelligence. This might be something for your app. I posted this in the community on the Node.pro for you.
So, is there anything? Can we explore this a little bit more? Can you click through, or
It says get started on Canton. View dashboard.
so, Mike? Can you share that screen
Yeah,
that
yeah.
you're?
I'm signing in. I just want to make sure I'm not sharing any sensitive information. Let's see. Signing in now. Continue.
Okay, so it says AI-driven systems that interpret, connect, and coordinate blockchain activity, turning data into intelligence. All right. I mean, a lot of buzzwords there, but so what
Yeah,
is
yeah.
this? What is
And
this?
I'm not seeing anything that makes me excited. So it routed me to something called One Pilot, and I saw that in on that Canton News website where it has all the different apps and dApps and stuff like that. But it's showing real time insights into Canton Network ecosystem, track prices, supply, and network activity. So it doesn't look like, other than the live price, nothing is populating to here. Network activity, nothing. So this is a
There's
big nothing.
nothing. There's nothing there. Click
Yeah,
on developers. Click on where it says developers.
register for API access.
I mean, yeah. So this is a nothing burger right now. It looks like.
Yeah, yeah.
Okay, no big deal. So, for me, I really just want to get started with the wallets. Like I need a hardware wallet and I
Oh,
need a couple of hot wallets.
Scotty says something that could be the case. Maybe because like we got to build something out. So maybe that dashboard gives us data on whatever we build.
It could be. It could be that for sure.
Yeah, because it's my dashboard.
Got it. That would make
So
sense.
yeah, it says my dashboard here. So
Go
it
to the
looks like
see the Learning Center up there. Go to the Learning Center up in the top next to. Let's see what it says.
so getting started. Canton Network, tokenomics, understanding Canton Coin and the network's economic model, governance, how Canton Network is governed and why it matters, privacy and security. Okay, it looks like it's just like education on the Canton Network and the Canton token.
Yeah, I don't know. We need a little bit more than that.
Yeah. I think that for now that's nothing.
Yeah, so I'm taking a look over here. Whenever I start exploring a new chain, it always starts with not just the dApps on that chain, but the wallets. So we took a look at that one wallet, whatever it was, that didn't work. And so here's Console Wallet. So it says secure self-custodial wallet for Canton and EVM. Okay, so it looks like this is a browser wallet. Mac and mobile with clear signing. Okay. Install. There's a desktop app. And oh, look. So it's on pre-register for access. Come on, man. Does this work? Console wallet. Okay. Awesome. Add extension. Oh, this is great. Okay. So I just added the extension to my browser. And great, create a new wallet, import existing wallet. I'm going to create a new wallet. Okay, so it looks like this does work. Okay, so it says request access. Enter your email to join the allow list. You'll get an invite to create a wallet. Dude, that's such bullshit because that means that it's not truly permissionless. Like if I've got to ask for access to use the wallet, doesn't that mean that how could it actually be self-custodial if I've got to ask for access to use it? Doesn't that mean that they could just turn off my access? And then what happens to my assets? And yeah, Crypto Stevo, I've got a bazillion wallets, dude. Man, none of this stuff actually works yet.
No,
Okay,
I mean that's definitely the frustrating thing. I mean it's a double-edged sword. I mean, it's like if even a portion of these things that are building, and it's an if, but we've seen, there's definitely stuff that's going to go live. But some of these smaller projects, if they end up going live, they're going to contribute to the burn. I'm more focused on things like the DTCC, the New York, the New York Stock Exchange, the banks, the institutions. Because if you go to that Canton Network, oh yeah, okay, oh there we go. If you go to the Canton Network, where you can look up financial institutions, I mean, it's a long list. Bank of China, Bank of America, Banco Santander, Bitcoin Suisse, PNP Paribas, BNY, Citibank. There's some big, DTCC, Euroclear. There is some big names. Franklin Templeton, Goldman Sachs. These are all people that are actively building or have launched on Canton Network. Wells Fargo, UBS, London Stock Exchange. I mean, this isn't maybes and ifs. This is real adoption. This is real, going to be real network usage that's going to contribute to that burn.
So it looks like Wally might work.
Okay.
Wally wallet, enter invite code or sign up for an invite. So create wallet. Let's see, is it going to allow me to do this? Okay. Your authenticator does not support. Passkey added, Touch ID, Windows, etc. Sign up for an invite. So, man, like all of this stuff on Canton, the one thing that's kind of frustrating for me about all of it is that it doesn't look like it's actually permissionless. It looks like it's all permissioned. Like, even though it says like, oh yeah, totally permissionless, trust me, bro. Like, it looks to me like you have to ask for an invite. You have to ask for permission to use it. And if you have to ask,
that's the wallet so far, right?
it seems like it's all of this stuff. It's the wallets, it's the dApps.
Well, a lot of it is just to get early access. Like the beta. Because that's like what I've been running into with like Cancore and Helios. It's not live yet, and so like you're asking for early access to it. Same thing with Alpin. In the chat, my buddy from Hawaii, he got early access to it and has been earning some really good yield, but it's because he just got early access. It's a lot of this stuff isn't live yet. Well, that one says live.
Yeah, see, that's the thing though, Mike. They all say live, but like you have to ask for access to all of them. So like if I go back here and I go click on wallets, like CC bot, it says waitlist. Console wallet, it says live, but you got to ask for access. Cypher Rock, I bought it and they haven't responded to me. Vala wallet, it says live, but you got to ask for access. Wally, it says live, but you got to ask for access. So I just don't know, like, is it truly permissionless if you've got to ask for access? Like, I don't know. Okay, and then Kari wallet says a Canton native wallet, self-custody. So when I see self-custody and permissionless, that means you don't have to ask. But it looks like for all of this stuff, you have to ask. And this says it's live, but there's no website, so I can't even like get to the website. C8 wallet, let's take a look at this. Cantor wallet, all right, it says live. Let's click through to visit the website. Here we go, here's the website. And it says get in touch. So like, how do I, I don't want to have to get in touch. I just want to like, let me use the wallet, man. Like,
Yeah.
what's going on here? I click on products. C8 Enterprise Wallet. Okay, C8 Vault. Okay, awesome. So wallet, enterprise wallet, system properties, get in touch. Like, how do I just use the wallet here? Yeah, so, okay. This doesn't even work yet. Great.
I agree with Crypto Steve-O. I mean, it said enterprise, so I'm guessing that you have to get a hold of them because it's for enterprise. It's for institutions and stuff like that, institutional use, not retail.
Gotcha. Okay, but that was the case for all the rest of them too. CC-bot, console, Vala,
Maybe they're not
Wally.
retail. Maybe they're not retail wallets.
How about Ascar? Let's take a look at Ascar. So it says live on Canton. Trade, swap, and bridge with a non-custodial wallet. Great, right? So we should be able to use this. Visit website. Okay. Ascar Dex wallet is live. Sweet. Okay, so open wallet. Okay. Your keys, your assets, one synchronized network. This looks pretty cool. So that means that I should be able to use this right now. So download. Okay. And step into the Canton economy. So it says it's on Google Play. What is a register code? Okay, so I want to see, is this only for mobile? If this is only for mobile, that's cool. I'm going to go ahead and just open up and see if I can get this on the Play Store. So get it on Google Play. So what is this called again? Ascar Dex? Ascar Dex? Ascar Dex wallet? There it is. I see it. Ascar Dex wallet, non-custodial crypto wallet for Canton. Awesome. So I'm installing this on my phone right this moment. Okay, so what is a register code? Get your registration code. Sign in with Discord and X, then generate your one-time code. See, what the fuck, man? That's bullshit. Like, you shouldn't need a registration code to use a wallet. Okay, allow, create new wallet. Okay, so I've got the app. It says, but it's asking me for a registration code. That's not permissionless, bro. Like, what the fuck? Okay, that's Ascar Dex. All right, so back to wallets. Arcana. What is this Arcana? Visit website. Okay, so here's Arcana. Join waitlist. Again, join waitlist. Okay, enough with that one. And Temple Digital Group. So this is...
I started a Loop wallet just fine.
Yeah, me too. I was able to use Loop no problem. Capital markets built on Canton. Sign in, product, bridge, vaults. Okay. I mean, all right. Well, it seems as though many of these wallets require, like, it looks like permissioned access. Like, if you have to ask for a registration code to be able to use the product, in my opinion, I think that is not permissionless. But Loop was. So why was it that Loop allowed us to, like, use it? So
maybe because it's meant for retail, and I mean, I know that a big part of Canton is compliance. So AML, KYC, all that stuff. Maybe that's why you have to register to use a lot of these wallets. Is that's a layer of KYC and AML that they're using.
Well, I mean, I don't like that at all. But Loop is cool. Like, I was able to sign up with Loop no problem and create a wallet. So I just, like, the challenge for me, Mike, is if this stuff is actually KYC AML, that means that the permissionless nature of this is fake, because that means that your assets can be frozen. Yeah. So I want to go in eyes open. I'm not saying that it's bad inherently. I'm not saying it's bad.
I mean, it's what you're saying is factual. I mean, you can't argue that. That's why I love facts. It is what it is, and we need to call it out for what it is.
So let's see here, Loop wallet. So this is the only Canton wallet that I've actually been able to get to work so far, without like asking for a code or permission or
A
an
blood
email.
test, or
Yeah.
a
If I go to
retinal scan.
right, so okay, if I go to settings, the one thing that I'm kind of concerned about with this Loop wallet though is that because all of the other wallets required some type of permissioned access, Loop didn't, but that still doesn't mean that it's not permissioned. Because if let's say that I use Cancore, right? Let's say that I hop into Cancore and I swap some USDC for CC and send that CC to Loop. Well, if that CC lands in Loop, but I can't do anything with it until I like pass some type of KYC AML or like get some code from them, then even this might be a little bit. So, have you ever sent assets, Mike, on Canton natively yet?
Um, Trying to think. I bought most of my Canton. Actually, yeah, I have, because I bought on Kraken, and then I sent it to my Braun wallet, and the Braun wallet is that's one that I've used extensively. So, and it didn't ask me for anything crazy, and I was just able to start that. And I really liked the onboarding too. It was super easy. It doesn't use like a complex, like a seed phrase or anything
Right.
like that. You know, the Braun wallet by far is what I've seen. Has been the best one that I've used. As far as holding native can.
So you see here where it says recipient party ID and memo.
Yeah.
I've seen this across a bunch of these Canton wallets and dApps,
Mm.
and it's just something new. Like I'm used to, like an address. I'm used to like a wallet address or like an account address. I'm not used to recipient party ID and memo. So it's just, it's not bad in any way. It's just, this is something new for me as I'm, getting used to and learning this Canton ecosystem. So it seems like this ecosystem is a bit more permissioned than many other ecosystems are, which in and of itself is not bad. But I want to get used to this. So, all right. So let's say, I say receive. All right. So look, it gives me a party ID. So I guess this is my wallet party ID. So if anyone wants to send me some CC, there you go. You can send me some CC here, I guess. Okay, so that's receive. There's send, bulk transfer, drag and drop a CSV. Huh. Okay, so if I click on discover, Canton Pay, Temple, Unhedged, Eximos, Silvana, Hecto looked super cool. Alpend, there's Alpend. Okay. Let me go ahead and click on Alpend. Featured dApps are developed by participants in the Canton Network ecosystem. There is risk and potential loss when using or trading on any featured apps. Okay, continue to Alpend. All right, and it says get early access, so I can't use it yet. Raven Market, decentralized digital options protocol. Continue to Raven Market. So read the announcement. Raven has been acquired by Premia. Oh, got it. Yeah, that's right. Premia. Yeah.
Do you want me to show you the Braun wallet real quick?
Yeah, I do.
All right. So yeah, the Braun wallet. Actually, I might have to share my whole screen. So like this is where I keep some of my Canton, because this is where I was farming that free Canton with with Braun. But like whenever you send, you just select the asset, select the network. You can enter address, an @Braun tag, or account. So I mean, like like say that you're like at David Crypto, then I could just put @David Crypto, and it could send it to you. If you have an address, and then I can send it to an address. But it's the UI UX on this is a lot nicer.
Yeah, but I don't think it's real. Like, so what I mean by that is I don't think it's like, so here, Mike, go back to send. And so if you're on, because I want to see, because what I've seen for like native Canton CC on Canton is party ID and memo. So what this tells me is that if
that's just on the ones that you've dealt with,
right,
Braun,
but so
Braun is native on Canton Network.
Okay, so select asset and see if when you select CC, let's say, so Canton Coin and on, so okay, so it says 2. So where it says 2, there it is. You see memo? Yeah, there it is. Okay, it's legit. So that means that the 2, it wouldn't be an address. It would be the party ID, right? That would be what you would put.
You can enter an address, an kind of like a like a Twitter handle. You can do like and then whatever their Braun tag is. So like if you had a Braun wallet, then I could send you stuff from my Braun wallet to yours using your Braun tag.
Okay, and then it says so address, @tag, or account.
Mm-hmm.
So I'm assuming that one of those 3 is the party ID, because I think party ID is like, because I'm trying to like map the terminology, right? So I think party ID is like the thing that's important when you're native on Canton, right? Like your party ID and your memo, I think. Like, and again, I'm just getting used to this, like for the first time, using this, like, starting to, use the Canton network. So it must be
like in the Braun wallet, you can stake too. So like Graham, you can earn almost 16%, Hyperliquid 2.3%, Solana 5.48, and Ethereum 2.56.
Well, so you see what Crypto Steve is saying in the chat? This is the whole thing that I'm trying to drill down on. Is the party ID the address or not? I don't know. That's why I'm
those other wallets.
Well, no, for Canton, because I've never seen party ID except for Canton Network, like the terminology there.
Honestly, don't know. I would guess that it's just the address.
Well, but we don't know, So like here's a way we might be able to find out. If you click in Braun, can you receive CC in Braun? It says transfer, send. Can you receive?
Deposit.
Okay, deposit. Okay, so deposit Canton Coin. So click on Canton Coin, Mike. Okay, so that is your receive address, but that's not the same as a party ID. So that makes me think that you could only receive CC from another Braun wallet user. That's what that makes me think.
No, because I had to send this from basically I had to bridge it over for where did I send it from? I want to say it was from my Rabby wallet.
Well, no, if
it was from Kraken. I sent it from Kraken.
Okay. You see, I'm just trying to map this out, like how this Canton network works, right? So if you've got CC on Kraken and you sent it to your Braun wallet on the Canton network, then when you clicked deposit here on Braun and you clicked on CC Canton, and then you must have pasted in that address into Kraken to send it? Okay. I'm trying to make this make sense here, because that address that you showed to deposit CC into Braun, it looked like it was a Braun address, not like a.
Well, it's my Braun ID.
Yeah, but how can Kraken read a Braun ID? That's what I'm getting at. Because like if you send it, if you send CC from Kraken to Braun, but you give it a Braun ID, like that's not going to work. You see what I'm saying?
I would just guess that it's a simplified, version of my wallet address. That my Braun ID is attached to my wallet address. So instead of having to deal with a complex wallet address, it's just using a Braun ID.
Yeah. So, and Crypto Steve-O in the chat is saying that I'm nuking this. I'm not nuking it at all. I'm just trying. I've never used Canton natively. Okay. So I've never used CC natively on the CC network, on the Canton network. And so the terminology here is super important because
Jay-Z, I remember this. When you sign up for Braun, you have to create a CC address. It's an actual address.
Okay. So the reason why I'm just like so like anal about the terminology here is like, dude, you have to be super precise with the terminology because you try to send assets to the wrong thing, you lose them. And I don't know about you guys, but I'm not into sending my assets into the ether. You know what I mean? So yeah, that's why like you've got to be precise with the terminology. So not Scoop Boy, Scotty D saying Braun provides a next generation non-custodial wallet supporting Canton Coin and Canton native assets. And Crypto Steve-O is saying that is true, but I've never lost assets as long as it's on the same network. And Scotty D says that Canton site says Braun is native. Okay, good. So these are good things, but I still am unclear. So Mike, if you see where it says Canton Coin there on the right-hand side, so you're on the deposit, right? Click on Canton Coin. So yeah, right there. Okay, so here, pause here for a second. This is what I want to drill down on. So it says receive address, Braun, and then this long ass string. So if I'm over in my Loop wallet, right? Does this mean that if I had CC in my Loop wallet, that I would be able to send you CC on Canton Network natively to your Braun address here?
I don't see why not. I sent it from Kraken to here, and it got here.
Yeah, that's what I'm trying to figure out because I've never done this before.
Obviously, otherwise you wouldn't be able to deposit.
I mean, well, maybe not though. I just don't know. Never done it. So
well, and I'm sure that well, I'm not sure, but I would think that on Kraken, well, I mean, I don't know, is Canton Coin on Kraken like native CC? Or are they just giving you the dollar value, and whenever you transfer it off of there into onto the Canton network into one of these wallets, it's swapping it into the actual native Canton, giving you the dollar value?
See, I don't know. I don't know precisely, but what I just did is
native Canton. I know on Braun it's native Canton, but like on Kraken, I don't know if that's native Canton or if it's just saying you bought this many tokens, it's worth this much, and in the back end it's just holding it in like USDC or something like that, and then whenever you transfer it off into a Canton native wallet, then it actually swaps it into that Canton token.
I don't know. But I'm over here on Loop, and the discrepancy that I'm trying to resolve here is when I see your receive address.
We're like 20 minutes over.
No, I know. So yeah, look, the only discrepancy that I was trying to resolve there was like, okay, if you've got that Braun address, and then when I go on over to Loop and I say, okay, I want to send CC, and it's giving me like, okay, so if I click receive CC, it gives me a party ID. It doesn't give me like an address. And I just pasted my party ID into a text document just to see how long it was. The party ID is a hell of a lot longer than your receive address was in Braun. And that makes me think that these are two different things. So like I'm just, look, just trying to learn how to use Canton Network. That's what I'm trying to do. So, but yeah.
Whiskey says, just try and send your whole wallet to me and I'll send it right back. I promise.
Yeah. Well, hey, learning this stuff live and in public. That's what we're doing.
No,
which is pretty cool.
mean, that's what we always say is, I mean, we're here to learn just as much as we're here to teach. And, often, the best way to teach is to learn together, is to just, muddle through this stuff, make mistakes, show, what the, live, real, raw experience is like, not go through it all, figure it all out, and then just give you the polish like, oh yeah, look, just, click, 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 and here you go. It's that easy. It's, we want to give you the real raw experience trying to navigate, these markets and these apps and these protocols and these, chains and, all the different aspects. I mean, that is, what we need to flesh out here is, what is the experience? And we're knowledgeable, two knowledgeable individuals on how to do all this stuff. Imagine if somebody doesn't know about crypto. They don't know about wallet. What's that experience going to be like? So
good luck,
Yeah. No, I mean, but that is the real, meat and potatoes of it is onboarding. Who is going to have, the one wallet to rule them all? Who is going to have the platform that is going to make it? And that, like, again, that's why I'm so bullish on Coinbase. I mean, I'm not like a big Coinbase bull, but I'm bullish on what they're doing, where they're, removing barriers to entry for retail people that don't have the time to learn crypto at a deep level like we do, but they want to invest in these assets. They want to take advantage of DeFi and take out loans on their Bitcoin. That's the kind of stuff that I'm bullish on. Is what is going to onboard the masses, because wherever that liquidity goes, that's where fees are going to get generated. That's where the money is going to be for us that provide liquidity, for those people that want to take out loans and they want to swap and they want to do all these different things. So that's where my focus is. That's kind of my final thoughts on this.
Yeah, and look, I remain very interested in and very bullish on Canton Network. I think that adoption is a big deal. It's just that I've never used Canton Network natively. Okay. So like whenever I see a party ID and a memo and a Braun ID or a Braun address, to me, those are different things. So I'm trying to figure out like, all of these different dApps and, wallets built on top. I'm just trying to learn how to use them, learning right there out in the open for everyone to see it. So yeah, there we go. Thanks everyone. Appreciate you.
All right. Well, we appreciate y'all, and join us tonight. We'll be doing crypto trenches and diving deeper into, some of these, content creators, some of these projects, and seeing if we can, flesh out, who's giving, good information, who's shilling, who's, trying to pump their bags, who might be paid. We don't know, but, we're going to dig and we're going to see what we can find out. And some of these projects, see if we can, peel back the veneer and see if there's a wizard behind the curtain. So with
or
that,
not.
Yeah, or not. We appreciate you. And until then, Veteran Crypto out.
Peace.